Welcome everyone. We're going to give everyone 2 minutes to get in, so please stand by. But go ahead and tell us in the chat where you're coming from and we can get to know each other while we're waiting here. Thanks. Hello everyone from Kendall. Welcome everyone. I'm Lisa Esquivel, editor of KPC Media's Greater Fort Wayne Business Weekly, and I'll be your moderator for today's webinar, the first in a new monthly series that we're bringing free to subscribers. Today we're presenting Paycheck Protection Program, a PPP update. As many of you know, the second round of the Federal Paycheck Protection Program, PPP, has fully reopened now, and we're proud to have several representatives from Baden Gage and Schroeder here today to give us an overview of the program, including the changes in the second round. These experts will also answer any questions about loan forgiveness if you applied last year. We have with us today Kara M. Smith, CPA Director, who has over 20 years of professional accounting and business consultations. Part of her focus, as you see here, is tax reduction strategies. We like that. Also, we have Tyler M. Engstrom, CPA Senior Manager, who has experience in tax consultation for individuals, corporations, and partnerships, but also nonprofit organizations. And also with us is Melissa J. Bradberry, CPA Director, who helps clients involved in medical industries, financial institutions, manufacturing, and service industries. So I'm sure you would agree we have a great wealth of knowledge today in this webinar. Welcome, Kara, Tyler, and Melissa. As part of the CARES Act pandemic relief package that Congress passed in December, PPP has undergone some changes, including expanding what entities are eligible. What some companies found was that while they could use the loan to keep their employees on the payroll, which was the goal of the program, there were other expenses and other entities that were initially covered to keep organizations going. This might be your first or second time applying for a PPP loan. A number of you have sent in questions already, but for those who have just have them now, please be sure to join in. If you are not regular Zoomers, click on chat either on the bottom or to the right of your screen and type your question, or look for the Q&A on the bar at the bottom of your screen. I'll look over, I'll look for those questions and we can go over those at the end of the overview, which our presenters are prepared, have come prepared with some upcoming slides. Be sure to respond to the polls we'll have throughout the webinar. If we don't get to your question because of time, don't worry. Baden Gage Schroeder will send out a group email with answers to all the questions that we received today, or you can reach out to them directly. So let's get started.
Thank you. Okay, so while today the title of our webinar today is about the Paycheck Protection Program update, especially associated with the stimulus bill that was passed in December. There were some other mentions in there that we thought would be of interest to everyone. So while we'll spend a lot of our time talking about the PPP and the updates to that as part of the stimulus package, we're also going to talk about the employee retention credit and then go over some other stimulus provisions as well. But before we get started, if we could do our first polling question.
So we'll give everyone a few seconds to take part in that.
We need control back, Laura.
Okay, the Paycheck Protection Program. I kind of have my slides broken into 3 different sections here. Figured we'd start off with an overview and refresher of the program overall, discuss some updates and changes that affect, not just PPP Round 2, but kind of go back to PPP Round 1 as well. And then spend the last portion of my presentation discussing just PPP Round 2 and some of the requirements for that program. So, just a quick refresher here. Paycheck Protection Program, designed to keep employees working during the COVID-19 pandemic. It's a loan that can obviously be converted to be forgiven should certain requirements be met. There's no collateral, no personal guarantees. These loans are serviced at thousands of retail banks across the country. And it's kind of crazy, it's been 10 months since we've been talking about PPP loans, going back to last March when companies first began applying for them. Now we're seeing a lot of companies, applying for forgiveness, or maybe they've already gotten forgiveness and now going for Round 2 as well. So it's almost been a full year discussing PPP. It's kind of crazy to think about.
And that like a collateral or personal guarantees, that's really important for small businesses that, communities that really need those businesses.
Absolutely.
Absolutely, yes. So now some changes and updates to the PPP overall since, probably since the last time we've had a webinar or spoke to a lot of people. And this is outside of the stimulus bill. So none of these rules are in the stimulus bill. This is just recent updates. SBA Form 3509 for loans in excess of $2 million. This is where companies that borrowed $2 million or more are going to have to basically prove the necessity behind them receiving that PPP loan on this Form 3509. Now, we do understand that the SBA is going to make these decisions as they say, expeditiously, but basically what they're looking for is red flags as to, maybe a company shouldn't have received this money. Also, many of our clients and other businesses have received forgiveness, or maybe they've applied for forgiveness and are waiting to hear back. From our understanding, that process has moved pretty quickly here. This might be a good time too for a poll question to see, I think we have one on how many businesses have applied for forgiveness or I've already heard back on forgiveness.
Okay, so be sure everyone to take part in that poll right now. You want to give everyone like about 10 seconds to do it?
Okay. I think I need access back.
We're showing results now.
Okay.
And we can't see those results. What do those,
Okay.
what do those look
So
like?
about 52% of the people, respondents said that they had not, they answered no. And about 30% said yes.
Okay.
Okay.
Mm-hmm. And these forms that you're talking about, people can go to sba.gov. And should you fill out that paperwork before you go to your lender, make an appointment for your lender?
Each lender is different, but I think mostly what we've seen here is some sort of portal being set up where this is done electronically to kind of streamline the process, not just for borrowers, but for the banks too, just with the sheer volume that they're working with.
And a lot of our clients, they actually have, though, used the forms. So you have that information in front of you before you go to the portal. But we encourage people, if they have not asked for forgiveness, to log on to their bank portal, because every bank is different as to what they're requiring as part of the forgiveness process. So just understand what reports are going to be required, and even the little things, like some banks require files to be named a certain way. So just, again, understand from your lender what's expected.
You want to know so that it doesn't slow down your process. Yeah,
Absolutely.
Okay.
Now, here are some additional changes and updates that came through with the recent stimulus bill that was signed into law right at the end of December. Now, when I discuss these changes, I think it's important to remember this isn't just for PPP Round 2. These changes also affect PPP Round 1. So that would be existing PPP loans that are still outstanding. So let's just think about the program as a whole when talking about these changes. So we have some additional expenses that can now be counted towards forgiveness. I'm going to go into detail on those in the upcoming slide. We can now participate in the employee retention credit and the EIDL advance, as well as PPP in full. But as Melissa, I think, is going to touch on, you still can't double dip on those expenses. You're just allowed to participate.
And that EIDL is the Economic Injury Disaster Loan.
That is correct.
Correct, yes.
Yeah, originally the way it was worded is with the PPP loan, whenever you went to ask for forgiveness, if you had received any of these advances, then you had to reduce the amount of forgiveness by the amount of your grant, but that's no longer the case.
Another simplified forgiveness form, this one for borrowers that borrowed less than $150,000. And this fourth bullet point is probably the one change that affects every PPP loan. And that's that this forgiveness is no longer taxable. I'm going to be going into detail on this as well in a future slide, but this might have been the most newsworthy or noteworthy item that came through on the stimulus bill.
Definitely, yeah.
And then finally, we have allocations for additional PPP Round 1 loans that had previously been closed for entities that did not participate, or for entities that maybe paid some back, didn't borrow in full. They can go back and really maximize their borrowing on these PPP Round 1 loans.
And they specifically addressed a lot of partnerships who may not have included their owners' self-employed income when they did the first round of applications. They're now opening this back up for businesses to potentially put in those owners' self-employed income to get a little bit more out of the PPP one.
Now, if you read the fine print of this bill, it says that PPP Round 1 loans that have not been forgiven as of the enactment date of this bill can go back and recoup additional funds. So our understanding right now is if your loan had been forgiven and closed before the enactment date, that there wouldn't be a mechanism to maximize your borrowing. So keep that in mind if you maybe paid some back or didn't apply for as much as you initially could have. So I spoke about some additional eligible expenses that can now be used for the PPP. Now, when I go through these, please keep in mind that you still have to have at least 60% of your forgiven expenses be payroll. So you're only going to receive full forgiveness if at least 60% of your expenses are qualifying payroll costs. Now, some of these additional expenses that can go towards that other 40% are business, software, and cloud services that facilitate operations, expenses.
Yeah, a lot of businesses, so like restaurants, they might have had to put in some kind of takeout service. Museums are doing virtual tours. You may have had to add Zoom for your employees, so those types of things. Yeah,
those are perfect examples. But also it could be existing services that you're paying for as well to qualify. So, but no, you know, a lot of companies have had to invest in technology during 2020, and that's probably where the motivation for this is. We have expenses relating to property damage, vandalism, or looting during 2020.
And is that related to the nationwide unrest? We're not talking about just regular kind of vandalism, tagging, that kind of thing.
The way it reads is it's any public disturbance during 2020. It doesn't relate to any specific one act. It's just in general, if there's public unrest or disturbances and any damage or vandalism as a result of that.
And just keep in mind, this would be if you didn't receive any insurance proceeds either.
That is correct.
Yeah, so out-of-pocket expenses there.
This next one is a very broad and general item for which there's not a great definition for outside of this, but it's supplier costs that are essential to the business. And you know, that's a pretty blanket statement that a lot of things could qualify for under that bullet point. And then finally, we have expenses to protect your workers during the COVID-19 pandemic, as well as, you know, comply with the rules and regulations that have come forth as a part of that.
So we're talking about personal protective equipment, masks, plexiglass.
Exactly.
Absolutely.
Yep.
Okay.
Yep.
Right.
Expenses to keep your workers safe, but stay in business as well.
Yeah.
So here's the tax impact of the PPP loan forgiveness. And, you know, you guys might have had discussions with your accountants during the year. Is the loan forgiveness taxable? Well, no, but the IRS came out and said, well, if it's tax exempt income, you can't deduct the expenses associated with that, which was really it was a wordy, roundabout way of saying the forgiveness is taxable. And that's kind of the approach that we took much of 2020. I think that guidance came out in April, and the stimulus bill was signed into law in December. So that was 8 months that we were anticipating, or you know, somewhat anticipating this loan forgiveness to be taxable. However, like I said, with this new stimulus bill, it overrode the IRS's initial guidance, and now these can be forgiven truly on a tax-free basis. Additionally, allows these forgiven expenses to count towards research and development credits and other tax incentive programs that are measured based off of payroll expenses, because now these can be deducted. While that answered a huge tax question hanging over our heads, there are still some questions remaining, such as the timing of this tax exempt income. You know, you might have heard your accountant talk about basis in the past. You need basis to take distributions or to take losses, and you do receive basis from this tax forgiveness income being forgiven. The question is the timing of it. Is it a 2020 item or is it a 2021? The other question remaining is, how are these states going to treat non-taxable loan forgiveness? A lot of the states in the country are killing for revenue dollars right now. So that's kind of a question remaining to be seen here.
A lot of states will conform to the federal law as of January 1st of that particular tax year. And as January 1st of 2020, none of this was even in a thought. So now it's up to a lot of states to determine whether or not they're going to conform, apply 2021 rules to the 2020 tax year, or whether they're going to make special exceptions. I know New York has recently come out, New York, Alabama, there's like 3 or 4 states that have specifically stated that they are going to conform to this December 27th bill.
So that kind of explains the tax impact from a theory standpoint, but here's an example of, you know, a company, ABC Inc., that received a PPP loan for $312,500. Now, this company fully complied with the rules during 2020. They used all the money for payroll expenses. So if we let's look at the right column first here, where we have revenue of $10 million less our cost of goods sold, gets us to a gross profit of $2.5 million. Well, thanks to the year-end stimulus bill, we can now deduct our payroll expenses in full of $1,500,000, even though those came through on the PPP. We have our utilities, rent expenses, that gets us down to taxable income of $850,000. And there's our federal tax bill, $251,600. Now, in the left column, this is kind of what we were projecting or at least warning clients against during 2020 is, hey, as it stands right now, these expenses are not deductible on your tax return. So we still have the same gross profit, $2.5 million, but now our payroll expenses are reduced by our PPP loan that was forgiven. It's much smaller deduction now, the same performance for the company year over year, but we have a much smaller tax deduction, which of course is going to increase taxable income to the $1.1 million figure and increase our tax bill for the year $92,500. So for this particular company, that was the tax savings by the stimulus bill getting done. It's important to remember too, this is for all PPP loans, so if you got it forgiven before the enactment of this bill, you're still covered. You still don't pay tax on your loan forgiveness. So this is just a quick example of how those numbers can work for you. So all that is kind of an update just on the program overall and where we stand right now with PPP. For the last portion of my presentation, I would like to really focus on PPP Round Two, because this is going to be a much narrower audience, for one, with a stricter set of rules. So it's important that business owners understand whether or not they will qualify for the second round of funding. Now, the deadline for PPP Round Two, I think we're looking at a shorter timeline here for business owners to make decisions. You must apply by March 31st of this year in order to get PPP Round Two, unless that is extended. We're going to talk about some other requirements in the upcoming slides. So on the surface, who qualifies for PPP Round Two? And like I said, it's going to be a stricter set of guidelines than Round One. But a lot of the rules that were in place still do apply. The covered period, for example, you have 8 weeks, you have 24 weeks, and now you have any time frame in between. So really, it's an 8 to 24 week period. I should have worded that slide better, that you have to use that money. Another interesting thing is, there's a lot of talk on the first round that borrowers needed to certify necessity. You had to certify that you needed this money due to uncertainty in the economic environment. And you have to do that again with this PPP Round Two. Now, that's a very subjective certification you're making, but it's still a certification that you're making to the federal government.
Well, and recall too that they came out and said there was a lot of uncertainty on the necessity requirements. And so they came out and said any borrower that received less than 2 million was automatically, quote, qualified under the necessity rules. And I don't know how that's going to be. I haven't heard of anything being addressed on this specific topic.
Right. Because as I'm going to mention in the upcoming slides that the maximum loan for a company is now $2 million. Well, is that going to be the threshold still? Are they going to back it down and provide a narrower focus? We don't know the answer to that yet, but we do think it's important that business owners document as to why they needed this money and what they plan to use it for and the uncertainty surrounding their business.
Because we heard a lot of criticism in the first round of, like major corporations who were getting millions of dollars in PPP help, and this was kind of directed towards smaller businesses.
So. It was, because there's a lot of tests now that you're going to have to meet. You're going to have to meet the revenue reduction tests that I'll discuss. No public companies can take out a PPP Round 2 loan where they could PPP Round 1. In fact, I read this morning that I think it was 88% of public companies plan to keep their PPP Round 1 loans. You heard a lot of businesses paying them back, but clearly not everyone is. And then kind of an interesting tidbit here is China as well. There's a specific rule here that says no Chinese business entity, through direct or indirect ownership can now have a PPP loan because there were some issues with, China's government basically receiving PPP loans in Round 1. So they really carved those out as well. And I think they fixed a lot of those issues to answer your question.
Great.
So qualifying businesses, this is where we'll really talk about some differences, I think, between PPP Round 1 and Round 2. Now the threshold for employees, it's 300 employees or less, as opposed to 500 employees or less for round one. Now there's still there's affiliation and location rules. For example, the accommodation, food, and news organization rules are industries. That's a per location rule. All other industries are 300 employees or less for the company. Round one compliance, you have to have fully used or will fully use all of the proceeds from your round one PPP loan before the expected disbursement date of the round two loan. And that's how it's truly worded in the bill. The question is, okay, how is that enforced? Do I have to apply first for forgiveness on my round one loan? I think there's still some questions remaining on that. Or, what if I only got 90% forgiveness on my round one loan? Does that disqualify me from round two? And I think those are some questions that there's not a clear answer to at this point.
There's no guidance out on it yet.
And I think there's some misunderstanding. We have a lot of clients that whenever they receive the round one funds, they put it in a separate bank account, and then they were trying to match up as they had those eligible expenses. So some of them actually left some money in that cash account, so to speak. That's not to say that you can't then have a round two, because if you think about it, you're kind of commingling your cash. So you really did spend all of yours as long as you had enough eligible expenses throughout that first covered period. So that's not to preclude you from applying again.
Right. And then probably the most relevant or pertinent test that we've seen, I know a lot of my clients were racing to see if they would meet this test. It's the lost revenue. So a business had to show a 25% or more reduction in revenue for any quarter in 2020 compared to that same quarter in 2019. We do truly understand this to be on a calendar quarter basis, regardless of your fiscal year end. So that's truly, it seems like how they're measuring it here.
Yeah, there seemed to be a lot of confusion as to the time periods early on, so.
Yeah, absolutely. And then, I think there's other confusions even more on this lost revenue topic that we're going to discuss in some upcoming slides. But again, qualifying businesses, you got your for-profit businesses, certain nonprofits. Actually, they expanded the nonprofits that do qualify for the PPP Round Two loan. Self-employed individuals and independent contractors still qualify. You must have been in business, though, before February 15th, 2020, and remain operational. Kara is going to talk about this Shuttered venue grant available from the SBA for certain public entertainment venues. But if you get one of those grants, you are not eligible for a PPP Round Two loan. So PPP Round Two, how's this computation work? It's very similar to Round One. It's 2.5 times your monthly or your average monthly payroll. However, this time we can look at 2019, we can look at 2020, or we can look at the 12 preceding months, which right now would be 2020. But if you apply in March, you can look back at the 12 preceding months, and it's a borrower pick. So you get to choose which is going to have the highest payroll cost for you to maximize your PPP loan borrowing.
What's nice is a lot of the banks, it's nice, but it's also a planning point, is a lot of the banks already have this information. If you're going to go PPP2 with the same bank where you got PPP1, they already have most of that information for 2019. So a lot of the banks are reaching out to customers and saying, hey, we're about 70% populated. We just need a little bit more information. Be cognizant of the fact you need to look at your payroll for 2020 or the 12 preceding months, because there may be a chance that your payroll might have been higher. And so you don't want to just automatically assume you're going to use 2019 numbers.
You don't have to reduce for your PPP expenses that were reimbursed on your round one loan either. So you're truly looking at your payroll expenses. Now that number becomes 3.5 times your average monthly payroll cost for certain accommodations and food service industries. So restaurants, for example, they can borrow a higher amount than they did on PPP round one.
And it also includes like caterer services as well. It's a It's a tax or NAICS code of 72.
No loan greater than $2 million, or for certain aggregated corporate groups, that loan is the maximum is $4 million. Now, it's important too that borrowers kind of strategize their timing with this PPP borrowing, because as you're going to see in Melissa's presentation, the employee retention credit is now available to companies that take out a PPP loan. So it becomes a exercise in projecting out your payroll costs to see if you can use both, receive your full employee retention credit, but also receive full PPP loan forgiveness. But at the same time, you don't want to wait too long and let it run out of money.
Gone.
Yeah.
That kind of speaks about some of the computations between regarding how much you can borrow. Now let's kind of circle back and talk about this lost revenue topic. So this is a definition taking straight from the SBA guidance that says, hey, you have to include all revenue in whatever form received or accrued, in accordance with the entity's accounting method from whatever source. So sales of products, services, interest, dividends, and rents. If you have investment income coming through on your business income statement, you have to include that. Royalties, fees, commissions reduced by your returns and allowances. One thing to keep in mind on a lot, if your company issues financial statements, you're going to see that PPP loan forgiveness as miscellaneous income, as loan forgiveness income at the bottom of your income statement, most likely. It's important that you do not include that in these lost revenue calculations.
Although I think I deal with a lot of healthcare in the healthcare industry, and there was additional funding, this HHS provider funds. From our understanding, those funds are included. I know that there was other, small grants that were available. Even Allen County had some of those. All of those would, from our understanding, be included in this computation.
Now, this has become a bit confusing in my world, but it appears to be on an income tax basis, or at least that's the initial spirit of this, because they're saying, hey, if you had a 25% or more reduction on an annual basis, so the whole year was down at least 25%, they're saying, hey, just give us your tax return, your 2020 tax return. We'll compare it to 2019, and that's how you prove it. I know we haven't prepared any 2020 tax returns yet, but that's at least one kind of safe harbor you can use. I was in a portal this morning, and it does seem like, okay, if that's not applicable to you, they will take your financial statements. So when you look at it from that spectrum, it's like they're truly measuring it on a GAAP or financial statement basis, if your company has differences between how they report their information. Here's a quick example of how this receipts test work. So here's ABC Inc. again, trying to measure whether or not they apply or qualify for a PPP Round 2 loan. First quarter was great. Hey, we're up 15%. Things are going good. But like a lot of companies, quarter 2 hit, and that's where they really saw the revenue reduction. They were down 27% in that second quarter. Well, that alone, that does it. Now we qualify. PPP Round 2, we hit that test, and it doesn't really matter what happens the rest of the year. Third quarter, hey, we came back a little bit. And then fourth quarter, wow, we got all our orders back, and we were way up. Fourth quarter, and year over year, we're up $50,000. Well, that doesn't matter because we still met that test in quarter 2. We're going to qualify for a PPP Round 2 loan, assuming all the other requirements are met from this company. Earlier I spoke about some of these additional eligible expenses. Here's just an overall look at eligible expenses overall, really. Qualifying payroll costs, remember, that has to be at least 60% of your expenses in order to receive full forgiveness. We've got our covered mortgage, that should say covered mortgage interest, but our interest, rent, utility payments, our covered operational expenditures that we talked about, property damage costs, supplier costs, and expenses to protect our workers during this pandemic. So here's some key takeaways for PPP Round Two. You know, some action items that you may have already taken or maybe you should be looking at. First, I think it's see if you qualify for this lost revenue test. See if you're going to be able to take out a PPP Round Two loan. And that's where I would start really with that PPP Round Two loan is looking at your revenue.
Yeah, just understanding there that we're not talking about just on the yearly basis, really
Right.
run the numbers for each quarter, because just like Tyler's example, you could actually qualify even if your year was up.
Yeah. And most companies start with that second quarter, and if they hit it there, they know they're good. And like Kara said, you know, really maximize your PPP loan by running the payroll numbers for all three scenarios, 2019, 2020, or maybe a rolling 12 months if you don't apply in January. See what's going to get you the best result for your PPP loan. And then, you know, kind of going back to that necessity requirement, keep a memo in your files as to why on the date of this application, this was necessary. You know, what was the uncertainty surrounding your business, surrounding your industry?
Well, and all the rules still apply as far as employee retention, keeping, you know, if you have a reduction in your head count, it could affect future forgiveness of PPP too. So you can't just look at 2019 and assume everything's okay. You need to really look at your 2020 head count, FTE count, as well as the payroll.
With that,
You're gonna do a
Polling question.
oh, do we have another PPP polling
Yeah, we'll
question?
do our last polling question.
All right, everybody can take our poll now. Are you qualified to apply for a PPP2 loan?
Lisa, are you able to see those results?
I haven't seen the results come in yet, so
Okay.
we'll wait a few seconds while everybody gets their answers in. Okay, we got about 80% in. I'll give you about 25 seconds. You know, everybody's getting a lot of good information today, so. And I know earlier, you know, a majority of the people on the poll said that they hadn't taken out a loan, so maybe they are planning on taking out a loan in the second round. It's more qualified, so. Okay, so our results are in. Yes, we have 52%. No, 33%, and does not apply 15%.
Okay. Yeah. So that's kind of comparable to what I think we've seen in our clients. You know, some of my clients that I thought were almost guaranteed to qualify in round two, some of them maybe were only down by 22% and just never made it to that 25%, while others, some of our manufacturers, maybe it was, you know, the third and fourth quarter that really got them qualified for round two. So
okay. And everyone, just a reminder, if you can use the Q&A versus the chat, that'll allow us to see a lot more there. Thanks.
So we're going to switch gears now and talk about another program that was part of both the CARES Act, and then there was a major modification made to it with this second stimulus bill. And throughout this section, I'll kind of talk about this in two different ways, 2020 versus 2021, because there's different rules for each one. So I apologize, it's a little confusing, but there'll be a table in the back that kind of helps. So this employee retention credit, it was established under the CARES Act, so way back in March of 2020. It was a refundable tax credit that applied to certain employers that basically if they retain their employees, then they would be eligible. Specifically, if there was a partial or a full shutdown due to government orders, or if they had suffered a significant decline in their gross receipts. That had been defined for 2020 as a 50% decline if you look at that quarter 2020 compared to the same quarter of 2019. If you were one of these eligible employers, then the credit would be equal to 50% of the first $10,000 of qualified wages for a maximum of $5,000 per employee. So if you were an eligible employer, again, had that partial or full shutdown or had the significant decline in gross receipts, then you had to look at your employee count to determine what qualified wages were that would be eligible. If you had more than 100 employees, then it was only those wages paid that you paid to your employees for not working. If you had less than 100 employees, then it was all wages. So you're probably wondering, you know, why didn't we really hear any more about this? Because again, this was part of the CARES Act. Well, the biggest item was if you had received PPP loan, then you were not eligible for this tax credit. So, I mean, the bigger dollars were the PPP loan. So a lot of companies, you know, just bypass this credit altogether just to go get that PPP loan. Well, that all changed. December 27th, whenever the stimulus bill was signed into law, there were 4 major changes made to this particular tax credit. The first of it they were retroactive changes. The biggest one being that employers that received a PPP loan were now eligible for the credit. And this went back to the date of the CARES Act. So back to March 12th, I believe, is when that was signed in. There was also a small change too as to the definition of qualified wages as it relates to the group health insurance. Another change was the credit expiration. So this was due to expire December 31st of 2020. It has now been expanded to include Q1 and Q2 of 2021, and now it expires on June 30th of this year. There was also changes made to the amount of qualified wages. If you recall, I talked about a 50% credit on the first $10,000 worth of wages. Well, the second stimulus changed that for 2021 and now has increased it to a 70% of the first $10,000 of qualified wages. And this is a per quarter. Again, I talked about in the original CARES Act, it was $5,000 per employee cap. This one is a $7,000 per quarter if you're an eligible employer. So for a maximum of 14. So if you think about it, if you were qualifying for both years, we're talking about $19,000 per employee. Yeah. The other change has to do with the gross receipts test. Before I had talked about that 50% decline in gross receipts, that has now changed to a 20% decline.
For 2021.
Correct. So like I said, the biggest item was that if you're now eligible for this tax credit starting in 2020. However, a lot of the same computations are still in place. So here I have some tables on the next couple of slides. Keep in mind that 2020 rules are different than 2021. It was really just that change to if you took out a PPP loan, now you are eligible for this credit as well. The first item has to do with the eligibility requirements. We're still into those 2 different scenarios. The first one being that you had a partial or full shutdown due to government orders. Now, I talked about my healthcare industry. I have dental clients too. You know, they were required to shut down, partially shut down for a 5 to 6 week period. So what that means is that they are eligible for this credit regardless of the gross receipts test, but then they're only able to count those wages for the time period that the government shut them down or partially shut them down.
And keep in mind that voluntary shutdowns, if you were an essential business, you were not required to shut down. You cannot claim these credits during this period. Unless you are eligible if you have the 50% reduction in your gross receipts, but you cannot use the shutdown part of the eligibility.
So that second test for 2020, the gross receipts test is still that 50% decline. If you look at one quarter of 2020 compared to the same quarter of 2019, If you jump over to 2021, now it's just a 20% decline. But you're looking now at, let's take the first quarter. So first quarter 2021, and you're comparing those gross receipts to 2019. So you're bypassing 2020. There is an election, though, that you can use the immediately preceding calendar quarter and compare that to the corresponding quarter for 2019. So what this is saying is, if we are in the first quarter of 2021, I can actually look at the fourth quarter of 2020 compared to 2019 and still be eligible in that first quarter of 2021.
So you're going to look at Q4 probably twice, one at a 50% level. Yes. And then for 2021, looking at Q4 of 2020 at a 20% level.
Absolutely.
And you may be able to qualify twice or be disqualified for the 50%, but maybe make the 20%.
Correct. Yep. And then you could do that again. Let's get to Q2 of 2021. You can look then at Q1 of 2021 and compare that to 2019. So you may be eligible and not really think that you would be. So there was also changes to qualified wages. Like I said, for 2020, we're taking the 50% of the qualified wages on the first $10,000 and capping that at $5,000 annually. You jump into 2021, that increases. So it's 70% of the first $10,000 per quarter per employee, back to that, $7,000 per quarter. Let's say you, again, qualify for both quarters. We're talking about $14,000 for 2021 and potentially $5,000 for 2020. Again, going back to the PPP loan interplay, CARES Act originally said that you couldn't take this credit. That was, of course, repealed back to the date of the CARES Act. But you jump into either year, 20 or 21, it allows you to do both. However, there's no double dipping, meaning the amount of the eligible wages paid, you can't claim those on your PPP loan and use those for your credit. But what we don't know is, first of all, let's say that you do qualify in 2020. How do you go back and claim these credits? Does that mean that we all have to go back and do amended payroll tax filings?
Well, if you recall too, as well, when we applied for our initial PPP forgiveness, we used 100% of payroll. We didn't factor, I know for none of my clients did I factor any rent, utilities, or any of those other non-payroll related expenses. So now does that disqualify me from being able to take the ERC credit since I used it all on payroll for PPP?
And just to kind of expand on what Kara's talking about, let's take a PPP Round One loan. Say it was $500,000 loan. During your covered period, you had payroll cost of $1 million. So you had an excess there of $500,000. Does that now mean that we could say, hey, we had more than enough wages to qualify for forgiveness? That extra $500,000, can we now go back and claim that ERC? Or let's say that we didn't even include any of our non-payroll items. So say we were just eligible for forgiveness because of our payroll costs, but we didn't include those non-payroll costs. Does that mean that there's some type of modification that we could make to our forgiveness and still then have all this excess payroll that would get you qualified for the ERC? And that we don't know right now. So, I mean, I would argue that especially if you had more than enough payroll, then why wouldn't you be able to qualify for this as well? So I say all this as of, running numbers, understanding all of the new guidance that keeps coming out so that you can maximize, both forgiveness and potentially both rounds of forgiveness and, your ERC on top of that.
And the IRS is supposed to come out with how to go about getting the, either by filing amended returns or doing a catch up in 2021. They have not published that guidance yet.
No, and some of you might be working on your, your payroll right now. Just because we don't have guidance right now, we have just continued on with normal business as far as our payroll returns go. and then we'll deal with this as soon as the IRS tells us how to do it.
What's the best way for businesses to keep up on what the latest things are? Going to irs.gov, SBA.gov?
That's exactly what I do every day. I start my day by going to the SBA.gov as well as IRS to see what they've recently published.
And being in touch with
so many things are changing.
Yes. Yeah.
Yeah.
And then being in touch with your accountant. I mean, we have learned more tax law. I've learned more tax law in the last, 12 months than I had I should say probably 24 months than I had in my entire career. So we are always, learning what and receiving guidance. And so if you're in constant contact with your accountant, then they know your business. They can run the numbers and see where you're eligible. So
because one thing I've really seen in this is every situation is a little different. You could have competitors in the same industry. Well, maybe their situations are still different. So it's important to talk to an accountant, talk to someone who's got your best interest, and really get a second opinion on things.
So we're going back to on this slide of who qualifies. Just keep in mind that employer size. Under the CARES Act, we talked about the 100 employee head count. The qualified wages are only, if you had more than 100, it's only for wages paid not to work. If you were under, it was all of their wages. The Consolidated Appropriations Act, that's that second stimulus bill, it really opened the door for more businesses because for this particular tax credit, because if you had 500 or fewer employees, then the tax credit can be taken on all of the wages. Now, you do have to look at affiliation groups whenever you're talking about that 500 count. And keep in mind that these numbers are different than what Tyler had talked about. So I know there's a lot of information, but each program has their own set of rules for qualifications. Another item that changed had to do with hazard pay and bonuses under the CARES Act. So meaning 2020, if you paid out any bonuses, those did not count as qualified wages. That has since changed. So for 2021, if there's bonuses or hazard pay, then that could be counted towards our qualified wages. And that's really, I bring this up because it's kind of a strategic planning opportunity. Let's say that you have an employee that maybe is under that $10,000 of qualified wages in a given year. Well, maybe you pay bonuses later in the year. This could be the opportunity to accelerate some of those bonuses so that you could maximize that tax credit. Advance payments, 2020 is over. So we jump into 2021. These are big dollar amounts. We talked about $7,000 per employee per quarter. For some employers, they need that cash now. So there's some opportunity here to get advance payments. They go through a computation. There is a reconciliation that has to be done in a specific form that you request these payments, but employers do have this opportunity if they wish.
Will that be the same form as what is used for the Families First Act, the expanded FMLA?
Yep.
Okay.
So what are some key takeaways from this particular tax credit? Just keep in mind that again, we never really talked about this in 2020 because of the interplay with the PPP loan. Now you need to kind of go back and see if 2020, if you were that eligible employer because of maybe that partial or full shutdown, if you had a significant decline in your gross receipts, and then, talk about your qualified wages. So again, there could be some refund opportunities.
And the gross receipts are very, very similar to the gross receipts as what Tyler showed as the SBA's definition, and following a lot of what's on your tax return.
And then that 20% decline, just like Kara was talking about, you could look at Q4 of 2020, not only for the 2020 tax year, but also for the 2021 eligibility. Talk about, your bonuses. Do you need to if you do qualify, do you need to look at everybody's qualified wages to make sure that you are maximizing the credit? The employee head count, you know, again, this is expanded to that 500 employee head count for 2021. Still remains at that 100 head count for 2020. But this is the biggest item, I think, is the timing with round 2 PPP. So let's say that you qualify for both right now. If you, in a perfect world, we would wait as long as we could to apply for round 2 because we have until March 31st. And then we would get all Q1 as ERC wages. And then we would get our PPP loan at the very end of March. And then because with round 2, we get to pick, you know, between an 8 or 24 week covered period, we could continue with Q2 doing these ERC credits and then finally kick in to do our PPP. But that will take, you really got to, you know, run the exercise to understand you have enough wages, you know, to qualify for both of these and make sure that the funds are still there whenever you go to apply. So just some strategies to think about.
Well, and again, you only need to hit the 60%.
Yeah. Yes. And that's
PPP.
Yeah, that's a good point Kara just brought up. So on the new, well, even your round 1, you may want to go back. If you haven't asked for forgiveness on round 1, make sure that you really hit the 60% that you're required to for your PPP loan forgiveness, but then kick in more non-payroll items and then do that again in round 2 so that you can maximize the ERC.
What did it say?
Okay, so.
All right, so then we have other stimulus provisions to talk about that were passed as part of the December package. The energy efficient commercial building deduction, the 179 Cap D, has now been made permanent. The work opportunity credit has been extended another 5 years. The alternative fuel excise tax credit, typically we see this a lot with folks who use or businesses who use propane in their forklifts. This has been extended another year through the end of this year, 2021. This is a big one. This one is definitely geared towards keeping our restaurant industry alive. Typically in the past, business meals were limited to a 50% deduction on tax returns. Starting in 2021 and all of 2022, they will now be 100% deductible as long as they are provided by a restaurant. Restaurant has not been officially defined, so stay tuned for that. Here's another big one as well too. If you recall back in March and April, we had the expanded FMLA as part of the Families First Act. Where we expanded FMLA to include all employers, and all employers were mandated to pay their employees either for self-care, the care of others, or caring for a child as a result of a closed school or daycare. There were certain daily limits for each category as well as pay amounts. That expired December 31st of 20. The new stimulus package extended this through March 31st of 2021 with the caveat that it's now optional by the employer. Employers are not mandated to provide this paid time off for employees.
And there was, just for clarification there, the Families First in the beginning, was it a 500 employee? If you were under 500 employees, I think you had to. And then there was also a small business exemption that some businesses may have been entitled to. But then if you fell in that category, it was mandatory. And just to expand on the hours, you don't reset, of course, you know.
Yes, absolutely. So if you had an employee who was off for 10 days, during 2020, they don't reset in 2021. they have used their expanded FMLA.
Mm-hmm.
So it's for folks, if you're going to offer it in 2021, it's for your employees who have not used their time.
Mm-hmm.
And also there are tax credits, you know, even in 2021, if you do offer it, there are payroll tax credits for what you do pay. Okay, as Tyler mentioned, we have the SBA offering grants for shuttered venue operators. As of today, the SBA is not accepting any applications for this grant yet. But if this does apply to anyone out there, you know, keep in mind that when it does open up, they are giving first priority. They are going to basically, by the applications they receive, give different priorities based on your revenue lost. And what this grant is it's a potential 45% of your gross revenues that you earned in 19. And then you could be possibly eligible for a second grant up to 50% of that first grant. It cannot exceed 10 million. You must demonstrate that you had a 25% reduction in your revenues in a quarter 2020 versus 2019. You have to use it for payroll, rent, mortgages, covered worker protection expenses, some independent contractor expenses, and other ordinary and necessary expenses. And it will not be included in taxable income.
So I look at this program as is kind of similar to the PPP loan, and it's just for these specific business types or types of entities.
So what types of entities are we talking about? We're talking about live venue operators or promoters, theatrical producers, or performing arts. And there's some specific requirements here. There must be a cover charge through tickets or a front door fee. The performers, the live performers must be paid, and not less than 70% of the earned revenue is related to the live events. And then ticket brokers are defined as those in the business of selling tickets. Other qualifying businesses, museums, movie theaters, as well as talent representatives.
So we were talking earlier, our catering businesses, those would not qualify.
No, they are not going to qualify. We also had a yoga studio, not going to qualify. Here's the business requirements. You must have been fully in business on February 29th of 20. Again, your gross revenues for any quarter are less than 75% compared to the same quarter in 19. You must still be in business or intend to continue the business as a result of this grant. You cannot be publicly traded, and no more than 10% of the revenues can come from the federal government. And you can't have more than 2 of the following characteristics. You can't be in more than 1 country, you can't be in more than 10 states, or you can't have more than 500 employees. If you meet any of these 2 requirements, and it takes 2, you're out. Strip clubs are not included, and if you're going to go after this grant, you cannot intend or apply for a new PPP loan, either a first round or a second round after December 27th. Quickly get through some individual provisions here. If you are a non-itemizer on your personal income tax return, you will be eligible for a $300 above the line deduction for charitable contributions. For 2020, it's $300 whether you're married, single, or married filing separately. In 2021, they expanded that, $300 for individuals, $600 for married filing jointly. If you are an itemizer of your deductions for tax purposes, then you are eligible to contribute to a charitable organization up to 100% of your adjusted gross income. However, the donations must be cash contributions made to a qualifying organization and must be made during 2020 or 2021 if you're going to do the 300 or 600. Our flexible spending accounts, if you recall, a lot of folks, you know, their child's daycare was closed or the schools were closed, and so they're still having withdrawals coming out of their pay, but their child's not going, so they're not having these expenses. And typically flexible spending arrangements you can only change if you have during the mid-year if you have a status change. Well, our provisions here in the December stimulus package allows plans to be amended retroactively, and you can carry over unused benefits now, which you never used to be able to. And there's an extension of a grace period. And the big one is that the employee can make a prospective change without having a status change. So this one's big for a lot of flexible accounts.
Now this has to do with the employer has to amend the plan though?
That is
correct.
Right? Yes, the employer is eligible to amend their plan to include these provisions. And that's all we have.
Great, okay. Well, we can get to the questions now. We have a lot of questions coming in. One of them was from Tom. He asked, I received $26,100 during the first draw of PPP. All paperwork was done correctly and full forgiveness was granted. For the second draw of PPP, how long do employees need to be retained in order to receive forgiveness? Is it just for the 8 weeks following receiving the PPP money?
So again, going back to our comment, the same rules apply to round 2 as they did in round 1. So there is some employee retention. However, you have the option to use a covered period between 8 and 24 weeks. So I would encourage Tom to really run numbers and to understand what his covered period needs to be in relation if there's any type of layoff that has to happen so that he can maximize that loan forgiveness in round 2. So it's not really just a cut or dry answer. You've got to run some numbers.
Okay. Chastity asks, what info will an S corporation look at in order to calculate the PPP while others look at the Schedule C line 31?
An S corporation is going to look at your payroll reports, and that strictly the payroll reports when applying for the PPP, because you're going to get up to the average 2.5 months of your payroll as PPP receipts.
You're looking at your 941s or your W3 and those wages that were reported to the IRS.
Okay. There are caps though, whenever on certain employees and the owners that you have to go through a computation,
And
the other components too of the payroll costs that qualify, not just the gross wages.
And someone wants to know, how quickly after the forgiveness application is submitted have your clients received notice of forgiveness?
So I've had some of them that are, less than 2 weeks, and I have some that it's been a month.
It was very quick in the beginning, and then obviously as more companies apply, they get busier, I think. But overall, we've found the process to be pretty efficient.
Okay. If the PPP Round 1 loan was not maximized and is already forgiven, is there a mechanism to get the additional funding now?
It just goes back to when was it forgiven. The fine print of that law reads that if it was forgiven before the enactment date of the CAA, which was December 27th, then you cannot go back. If it was forgiven afterwards, it sounds as if you could. That's, I think, the best guidance that we have at this point on that, but that's how the bill reads.
Now, Tyler, does it mean that the SBA has to forgive it, or is it just the bank's initial forgiveness?
I interpret it as being forgiven by the SBA.
Okay.
Basically, the loan being closed out is how I interpret that.
So there's a process in that whole loan forgiveness. First, it's step 1. It goes to the bank, and the bank goes through underwriting and says, yes, they're going to present this. From the bank's perspective, it's forgiven. But they have to present it to the SBA, and then it goes to the SBA, and the SBA does their second round of it. And so finally you get that final forgiveness whenever the SBA says that the loan is forgiven.
Lynn would like to know, for a company with multiple locations, can they apply for a loan for only 1 or 2 locations?
That was specifically addressed.
I don't know why you couldn't. I mean, if everything is a per location, so to be eligible, you're looking at a per location. Now that was round one. Is that the same for round two?
That was really tailored to certain industries, I believe. I think you could kind of do it manually because you don't have to accept the full amount, right? So maybe you could back into what that location's PPP loan would have been, but I believe really you look at the company by company basis.
Yeah, it is company by company. So if these multiple locations are all under the same company umbrella,
right,
that's where the majority of the information is coming from.
These location rules are really put in place to benefit the borrower in the event that you're one of these kind of covered industries, really accommodation and restaurant industries, and you have more than 300 employees, or for round one, more than 500 employees. Kind of why those are in place.
Okay. Bob would like to know, as a nonprofit, do we include capital campaign gifts? A large capital donation in 2019 can qualify for 2020. Ooh, it just flipped on me here. So he would like to know if you can include those capital campaigns.
If it's I think if it's reported on the face of the 990, then it's included. So if it's being reported as income on the not-for-profit's income statement on the tax return, then I think it qualifies as gross receipts.
We have a question from Kendallville. Do you expect additional changes with the Biden administration in 2021? Like will there be more loans? Will there be broader qualifications about the loans?
So everyone's probably already aware there's a third round of stimulus, package that Biden has been talking about. Within that, I haven't seen anything that's specific to these programs. However, that's not to say that won't happen, or as we receive more information from SBA, from the IRS, that it doesn't further expand these rules so that there's more people that qualify.
I think one thing we've learned throughout 2020, this whole process, is there's probably always going to be more changes coming down the road, and for the most part, they've been borrower friendly. So.
Okay. There's a question. We were a new business, sole proprietor LLC, in October 2019, and we are a medical practice. We didn't begin billing until 2020 as we were waiting on credentialing with insurance providers. So while we were in business before the cutoff, we had no real revenue in 2019 or in January and February 2020. Is there some relevant alternative to show revenue loss calculation? Can we show claims values instead, or something else?
So for startup businesses, I know there's specific rules on how to qualify. I don't know those off the top of my head.
They're specifically addressed on the IRS's website, FAQs.
Yeah, and within the SBA too.
And within the SBA, I believe, as well too. We'd have to further research that, as you know.
I think the first step too is, did you have payroll expenses or self-employment income up through February 15th? Because I think if you didn't, you would not qualify, is my understanding from a surface level.
Yeah, because if you think about the PPP loan, it's all based on payroll expenses, right? So like Tyler was saying, if there was billings going on, but if you didn't actually have any payroll, there's nothing to then quantify the amount of the loan that you are eligible for.
If in your PPP1 application, you fail to include health insurance in your payroll number, which is an eligible expense, and you have not yet received PPP loan forgiveness, are you saying that you can now get PPP money for this missed expense? If so, what is the process to get these funds?
That is correct. with that, don't include your employee withholdings for one. Make sure you just have the employer cost. But that is correct. That's what we're saying in terms of the mechanism.
I contact the banker where you got the original loan from to help you get through that process on asking for more.
Yeah. I have seen portals open for PPP Round One again. So I think there is a mechanism, but how you communicate that in the application, I think might be a little tricky. So communicate with the banker for sure.
Is the labor expense for temporary workers hired through a temp agency, does that count towards your payroll cost?
No, it does not, because that temp agency may or may not use those costs for their PPP application.
It's truly the employees that you are issuing the W-2 for.
Okay. If you received HHS funds, do those funds only count towards the quarter they were received when trying to determine if we qualify to apply for PPP Round Two loan?
That is a good question. I actually hadn't thought about the timing of these funds. Most of those were, I would say June. Then there was 2 more rounds after that. Most of those hit in Q4. So I don't know the answer, but Laura, do we get information? The question. Yes. We'll get that. Okay. Yeah. So we can get an answer if one's available right now.
The scenarios I've seen too, and maybe you've looked at this though, it became a moot point because our second quarter, before we got the HHS funds, well, that was our quarter that we hit. So maybe we got the HHS funds in Q3 or Q4 and we were okay, but maybe you got yours in Q2.
Yeah, most of the actual healthcare, they received theirs earlier than the dental practices. They were kind of later whenever they received those provider funds.
Another question, is the under 100 employees FTEs versus individuals? We have a lot of permanent part-time employees.
If it's in relation to the employee retention credit, I do believe it's an FTE count, meaning you need to go through the exercise to do your full-time equivalent.
Do you have a lot of up-to-date information available on your website that people can use as a resource as well?
We do. We're constantly, as we receive new information, we're trying to communicate that with our clients, and one of those avenues is our website.
Okay. Deborah asked, sub-S payroll is only one person, 100% owner, PPP money received, 24-week coverage ended in October, payroll checks issued in October, but not November, December. Do you record one employee at forgiveness application date of December?
Yes.
I believe so, yes.
And understand, so through the forgiveness application process, there's different types of applications that you can apply. Some of them are real short form. I think that's a 3508S. Those are for loans that are less than 50,000, if I believe that's correct. And then there's another form that's called the EZ form. And then there's what I call the long form. We had really encouraged our clients to use the S form if they can, or to use that EZ form. And the reason I say that is with the EZ form, if you met certain parameters, one of those being that you did not have a wage reduction of more than 25,000 and your business was affected by COVID, which that's almost everyone, then you were able to do this form. And this form, you didn't really have to take into account all of the FTE reductions. You weren't required to disclose it, and you weren't required to really give that information to the bank. So this individual, I would just encourage you to make sure you're using the correct form when you apply. And then if at all possible, use that EZ form so that the FTE headcount doesn't even come into play.
And part of that application too, it might still ask for number of employees, but it's more of a, biographical, data collection more than anything. if it's not part of your actual forgiveness calculation.
Yeah.
I think the main intent there is just to make sure you comply with the employee limits.
I would agree with that. It's not that you have, if you're not paying yourself in November and December, you still have one employee.
Correct. Yeah, because that application at the top of it is just like you were saying, demographic information. It's asking for what was your employee head count whenever you applied for the loan? What was it whenever you applied for forgiveness? Those questions do not come into play on the actual forgiveness computation. So don't be nervous about having to reduce that number if you have to.
All right. For the second round of PPP, the requirement of 25% gross receipts reduction, does it have to be a calendar quarter, or can it be a 3-month period over the same 3-month period of 2019?
We don't believe so. We believe it's specific to a calendar quarter.
Yeah, all the language makes us believe it's a calendar quarter. I haven't seen really one way or the other, but like I said, it's written as if it's a calendar quarter.
And that's easily one of those things they could come out next week and say, hey, just pick any 3 months, but that's our current interpretation.
Yeah.
Let's see. I think that's most of the questions that we have gone through. Is there anything else that has come up during the presentation that you wanted to remind people about?
I think it's just important that everyone understands that this second stimulus bill really expanded the PPP loan program. You now have this opportunity for round 2. It expanded the employee retention credit, so that I would encourage everybody to really run their numbers, understand each program and the eligibility requirements, and see if you fall into one of those categories or potentially both.
And working with your accountant, making sure that you're taking advantage of what is eligible for you. I mean, keep in mind, this bill that passed was over 5,000 pages long. I mean, and there were things that we could probably talk for another 2 to 3 hours about all the different tax provisions that are even in there that we didn't discuss today, because there was a lot of provisions also aimed at disaster areas and providing disaster relief for folks who may have a disaster loss.
Beyond COVID.
Beyond COVID.
Yeah. We do have a couple more questions that have come in. Please clarify regarding the question of going back and adding health insurance to your PPP-1 claim. That assumes that the PPP loan has not been forgiven and your business has to show the required decrease in revenue/sales?
No, because this would be a PPP-1 loan still that you're kind of, borrowing your full capacity, where maybe you didn't borrow the full capacity the first time around. So it's still under those PPP-1 rules, which has no revenue reduction requirement.
Yeah, so you're just increasing potentially round 1, but what mechanisms in place for that, I don't know.
Right.
Okay.
Yeah.
Deborah would like to know, I have heard there is another option for an agriculture PPP loan. Are you aware of this?
I heard the exact same thing as well too, and I don't know if it was a matter of a PPP loan or if there was additional funding being provided to agricultural companies through federal grants and assistance. I have been trying to find stuff within that 5,000 pages that specifically addresses this, and all I can find is that X amount of dollars, X millions of dollars have been appropriated to this, but I don't know of what that program is yet.
Okay. Another participant says, you didn't mention that SBA is making payments in 2021 on SBA loans for 3 months. Isn't SBA paying for 3 months principal and interest on SBA loans as part of the stimulus package?
Yes, that is correct. Yep. So if you had that 6-month payment being done, I believe it's your Section 7 acquisition loans through the SBA in 2020, you will get 3 more months of that in 2021. And that principal is paid on a tax-free basis.
Okay. We have about 5 minutes left, so if anybody has some last minute questions they want to get in. We do have another question of, please clarify regarding the question of going back and adding health insurance to your PPP-1 claim. That assumes that the loan has been forgiven and your business. Oh, did we go over that one? We went over that one.
Yeah, we did.
Okay. I'm trying to see if there are any new ones. I think that's, we have someone in Kendallville who'd like to know, would you review the revised rules on repaying the PPP-1 loan?
On repayment?
Yes.
Well, your first payment's due 10 months after your covered period. So I think the most common covered period ended in October,
Yep.
I want to say. So I'd be looking to make that first payment in August, but it is important to realize while that is a low interest rate, 1%, it still is accruing right now. So interest is accruing up until that payment date. But yeah, that's when you'll begin making your payments at that point.
So you either need to start making payments or apply for forgiveness within 10 months after your covered period.
And that's why everyone says 10 months to get this done, because that's when your first payment's due.
Yeah.
Okay, so again, participants, if your question has not been answered during today's event, Baden Gage Schroeder has graciously agreed to send out answers to all questions in a group email to everyone who registered today. This event is just one of Business Weekly's monthly seminars. Our next webinar will be February 16th, and that's going to be on small to medium business commercial lending. The webinars are free for Business Weekly subscribers. Non-subscribers pay $10. To register, go to fwbusiness.com and pull down from events on the menu bar to click on the webinars. And again, thank you, Kara, Tyler, and Melissa for the great presentation today. And to everyone who registered, please join us for future seminars. So thank you, everyone, and have a great day.
Thank you.
Thank you.
Thank you.